Welcome to our channel. Today, we're diving into the world of dividends, baby. That's right, we're talking about those beautiful, consistent payouts that keep your portfolio healthy and your pockets lined. Forget about chasing those speculative meme stocks with more hype than substance. We're after real, reliable companies that reward their investors year after year. If you're looking to invest in stocks that provide great returns, you're in the right place. Forget the get-rich-quick schemes and listen up. These aren't just companies, they're dividend-paying machines. We're talking about industry titans, the bedrock of the American economy, the kind of companies your grandpa wished he had bought back in the day. So, buckle up because we're about to break down the top dividend stocks that should be on your radar in 2025. These are the heavy hitters, the ones with the track record and the potential to keep those dividend checks coming like clockwork. Get ready to take notes. First up, we've got a true legend in the dividend world, Johnson & Johnson. This isn't just any company, we're talking about a dividend king with a 60-year track record of consecutive annual dividend increases. That's right, 6 decades of putting money back into investors' pockets. You don't get to be a dividend king by accident. Johnson & Johnson has a massive portfolio of consumer healthcare products, pharmaceuticals, and medical devices. They're a global powerhouse, and their products are staples in households around the world. Think about it, Band-Aids, Tylenol, Listerine, these are brands that have been around for generations. And that's the beauty of Johnson & Johnson. Their products are essential, recession-resistant, and always in demand. Now let's talk numbers. Johnson & Johnson currently boasts a dividend yield of around 2.7%. That might not sound huge, but remember, it's the consistency and the growth potential that matter. This is a company that has weathered recessions, market crashes, and everything in between, all while continuing to reward its investors with a growing dividend. When you're building a long-term portfolio, you want companies you can rely on, companies that will be there through thick and thin. And that's exactly what Johnson & Johnson offers: stability, reliability, and a dividend you can set your watch to. Next up, we've got another dividend aristocrat that needs no introduction, Procter & Gamble. These guys are the undisputed champions of consumer staples, with a brand portfolio that's practically untouchable. We're talking Tide, Crest, Gillette, Pampers, Charmin, the list goes on and on. These are products that people use every single day, no matter what the economy is doing. And that's the beauty of investing in consumer staples. Their earnings are relatively stable, which translates into consistent dividend payments for you. Procter & Gamble has been paying a dividend for over 130 years. You heard that right? Over a century of putting cash back into investors' pockets. And they're not just paying a dividend, they're growing it year after year. We're talking about a company with a 67-year track record of consecutive annual dividend increases. That's right, they've been increasing their dividend every single year since 1956. Now that's what I call commitment to shareholders. With a current dividend yield of around 2.5%, Procter & Gamble might not be the highest yielding stock out there, but remember, it's the stability and the growth potential that make it a true dividend champion. When you're looking for companies that can weather any storm and keep those dividend checks coming, Procter & Gamble is a name you can always count on. Now let's talk about a company that needs no introduction, Coca-Cola. This is a true global icon, a beverage giant with a brand recognized in every corner of the world. And when it comes to dividends, Coca-Cola is the real thing. We're talking about a dividend king with a 61-year track record of consecutive annual dividend increases. That's right, 6 decades of putting smiles on investors' faces with those sweet, sweet dividend payouts. Coca-Cola's global reach is unmatched. They've got a portfolio of over 500 brands, from sodas to juices to sports drinks, and they're selling their products in over 200 countries. That kind of scale and diversification gives them a level of stability that's hard to find in the market. Now, let's talk numbers. Coca-Cola currently offers a dividend yield of around 3%. That's a solid payout, especially when you consider the company's history of dividend growth. This is a company that's committed to returning value to its shareholders, and that commitment is reflected in their dividend policy. Sure, the soda industry is facing some challenges, but Coca-Cola is adapting. They're diversifying their product portfolio, innovating with new beverages, and expanding into new markets. This is a company that's built to last, and their dividend is a testament to their long-term strength. When you're looking for a reliable dividend payer with a global footprint and a track record of success, Coca-Cola is a name that should be at the top of your list. Hold on to your hats, folks, because we're about to talk about a telecom titan that's been quietly building a dividend dynasty, AT&T. Now I know what you're thinking, telecom, isn't that a boring old economy sector? Well, think again. AT&T is a dividend aristocrat with a 39-year track record of consecutive annual dividend increases. That's right, almost 4 decades of putting money back into investors' pockets, and they're showing no signs of slowing down. We live in a world that's increasingly reliant on connectivity. From our smartphones to our laptops to our smart homes, we need data, and we need it fast. And that's where AT&T comes in. They're one of the largest telecommunications companies in the world, with a massive network that spans the globe. And they're not just resting on their laurels, they're investing heavily in 5G technology, which is set to revolutionize the way we live, work, and communicate. This is a company that's positioning itself for the future, and their dividend is a reflection of their confidence in their long-term growth prospects. Now let's talk numbers. AT&T currently boasts a dividend yield of over 7%. That's right, you heard me correctly, over 7%. That's a massive payout, especially in today's low-interest rate environment. Of course, high yield doesn't always mean high quality, but in AT&T's case, you're getting both. This is a company with a solid track record, a strong competitive position, and a commitment to returning value to its shareholders. If you're looking for a high-yielding dividend stock that can provide a steady stream of income, AT&T is a name you need to know. Get ready to rev your engines, because we're about to talk about an energy giant that's been fueling portfolios with dividends for decades, ExxonMobil. Now I know what you're thinking, oil and gas, isn't that like so yesterday? Well, think again. ExxonMobil is a dividend aristocrat with a 40-year track record of consecutive annual dividend increases. That's right, 4 decades of putting cash back into investors' pockets, and they're not done yet. Love it or hate it, the world still runs on oil and gas. And ExxonMobil is one of the largest and most integrated energy companies in the world, with operations in every corner of the globe. They're involved in every aspect of the energy business, from exploration and production to refining and marketing. Now, I know what you're thinking. What about the transition to renewable energy? Well, ExxonMobil is well aware of the changing energy landscape, and they're investing heavily in renewable energy sources like wind and solar. They're also exploring new technologies like carbon capture and storage, which could help to reduce their carbon footprint. But let's not forget about the present. ExxonMobil is a cash-generating machine, and they're committed to returning a significant portion of that cash to their shareholders in the form of dividends. With a current dividend yield of over 3%, ExxonMobil offers a compelling combination of income and growth potential. Sure, the energy sector can be volatile, but ExxonMobil has weathered many storms over the years. They're a well-managed company with a long history of success, and their dividend is a testament to their ability to generate value for their shareholders. If you're looking for a high-yielding dividend stock with a long runway for growth, ExxonMobil is a name you need to have on your radar. There you have it, folks. 5 dividend-paying powerhouses that should be on your radar in 2025. These are companies with a proven track record of success, strong competitive positions, and a commitment to returning value to their shareholders. Remember, investing is a marathon, not a sprint. Don't get caught up in the hype of the latest meme stocks or get-rich-quick schemes. Focus on building a diversified portfolio of high-quality companies that can stand the test of time. Thanks for watching. Don't forget to like, subscribe, and hit the bell icon for more investment tips. And be sure to let us know in the comments which dividend stock you're most excited about. Until next time, happy investing.